So then let me ask you the question then. What do you think of the story narrative that's playing out today with these banks that are uh, collapsing? And there's a lot of stuff going on out there today, especially with commercial real estate, um, vacancies, and developers who are, I mean, it's just different things that I've heard. That's why I'm putting them out there. And developers who cannot get their permanent financing and have to extend existing construction loans because, frankly, some of their rates and terms are better in their construction loans than if they went out to get their permanent financing. And so we're living in a very interesting time. So I'm curious from your perspective because you're big into multifamily, and I'm just curious what you see and what you think the story is going on out there. A lot of shifting going on, a lot of shifts in the industry going on.
So maybe using the preamble of quotes is better to explain things. Darwin said, it's not the smartest, it's not the strongest who survive, it's the one that's able to adapt. So I think that now is an interesting time to think of how to adapt to the times. And I also believe that the best investors are seen in the downturn. So whenever you look at an underwriting, you know that it's wrong. So you need to rely on the operator's expertise to be able to understand the situation and adapt and change and learn and adapt again and then learn and then keep on going to that cycle to get to a better point. I hear too often people saying what's going on makes no sense. The Fed is raising rates when banks are collapsing. So on the last raise, they said this one's going to be the last one, or at least the market expected it to be the last one, and yet they raised more. And it's a signal that the Fed does not work for the banks. It doesn't work for the stock market. It works for its mandate, and it doesn't care about commercial real estate or banking, or it doesn't care about that. It just, their mandate is two things, and it's employment and inflation. And while employment has kept low and inflation has all the right directions, they're also working on the recipe that every time that the Federal Reserve has gone to 5 or 5 and above, the US has gone into a recession. So I think that the Fed is signaling that they're taking a recipe approach. They're taking with disregard to what's going on in the market. So that's why a lot of people are saying, I don't understand what's going on. Why would they raise rates when banks are failing? And this is the third or maybe fourth major bank imploding because of the situation, and then a bigger bank just absorbing them, and the market not pricing, like the market not even reacting. Yesterday was a flat day. Today was a flat day. So I really think that when things don't make sense, the flight to quality is the only strategy to do. The flight to quality means flight to tangible, flight to real estate, flight to the true, tried and true. And I just think that you need to learn, you need to win as an investor always. So I put that into that, like, you can't use the excuse that I don't understand what's going on to limit your action. Your action should be the inaction is the worst thing that you can do. So, but I'm curious, what do you think about it?
Well, I'm going to lead into what I think, but with one question though, because I think because I'm setting you up a little bit of a softball here. So, do you think that the banks are imploding because the Fed are raising rates, or because of something else?
So obviously that's a softball, but I would say it's also a two-edged knife, because you can definitely blame the Fed, but you can also blame the banks. So I also think that, and you can also blame the lenders, and you can also blame the commercial real estate people who are over greedy. So there's a lot of people to blame here. I think that it's and it can even be political. So I think that there's a lot of issues coming or surfacing out of that banking, what we thought was so strong, which was U.S. banking, and even stronger than that, Swiss banking collapsed because of overprinting money. And was it good? Was it bad? Was it necessary? In hindsight, it looks like a complete disaster. And so I actually think that there might be a lot of motives, and I don't want to be like, that's why I think it is a softball, but it could be also two-edged sword. I can say, no, it's definitely the Fed's fault, but it might not. That's not the whole picture. The whole picture is that there's many people motivating this, and I don't think that their actions are only in a vacuum, but the Fed is acting ruthless, and banks have a blank check, so it doesn't make sense. That's why people are confused.
I agree. They're confused. So my perspective on this is that it's a systemic issue. And all of the participants that you mentioned become part of the problem.
Listens, yeah.
Because the system's in place. And it's part of the fiat system that we have in place. We are a system, a monetary system based on credit. And the more credit that gets extended, the more, especially when it's easy and loose credit, the more people want to apply for credit, acquire credit so they can go and buy some of the things and overconsume. But what people don't understand and why they don't understand it is, and I explained this to someone just earlier today. I don't understand what's going on. I said, it's very simple. Think of having a credit card with no job. You can go and buy everything you want. You can buy the nice car, buy a nice house, everything extended on credit. At some point, the other side of your personal balance sheet has to have an income and some production. And the production, whatever you're producing, some income, has to service, pay down some of your debt. Because all credit is a draw on your future income, your future production. At some point, you got to come back and pay it off. And so when you have a system built on credit that's always leveraging future production, and the production doesn't keep up, and credit outpaces the rate of production, that's when you run into challenges like this. And it becomes just a movement of money is what fictitiously is created as production. And that's what we've gone through in the last few years. Whether you believe pandemics have been contrived or not, and where it was sourced and all this stuff, any type of crisis has the ability to create more money, print more money, and move more money around. And just that movement creates a fictitious economy. It doesn't really produce anything other than the movement of money. Underlying, you need real production.
Yep.
And so what you had in the last couple of years, I mean, and honestly, this has been going on for a number of decades. And just to go back just to the last period of the Great Recession, where subprime borrowers in this country were given were extended credit when they were not creditworthy because they ran out of borrowers because they had, a housing boom going on, and let's just find more people to go into houses. And it didn't matter if they didn't have an ability to repay because we'll figure it all out. And so when that imploded, the Fed came in and started buying a lot of these mortgages on their own balance sheet. Operation Twist and QE, and they had to bail out the insurance companies because a lot of the insurance companies were insuring a lot of these mortgage-backed securities and bonds. And so through the insurance companies, the U.S. taxpayer ended up bailing everybody out through their proxy system. And when you do that, you're just putting more debt onto the books. More debt means more movement of money, more creation of debt, more people want their fair share of the debt and the credit. but nobody's paying attention to the other side of the balance sheet of where's the production to support all the debt. And it gets to a point where at some point the debt's got to be paid. And if you can't pay it with production, think of it as a company, right? If you don't have enough production and you don't have enough income, then how can you afford to pay salaries? How can you keep people employed? Well, you can't. So what do? Then you got to cut. So what you're seeing in the banking industry are those banks that I think that chewed on the free-flowing credit too much and now are not able to survive now that these interest rates are going up. The credit is not flowing as easily, and now they're being cut from the system because they didn't plan properly, because they didn't manage their risk properly, and all we're going through is a little bit of a gentrification of the industry. Sure, the industry is solid, the industry is strong, and all we're going through is a cleansing. And people are seeing that through some of this cleansing and industry getting a little leaner. There are going to be some banks that are not going to survive, some that are going to have to pay the ultimate price of imploding. But that's just natural part of a cycle. We've gone through cycles like this before. There are tons of opportunities in cycles like this. And all we're going through is a deleveraging process. On top of a number of other things I just say as well, politically, geopolitically, you have all these different influences going on that are affecting a lot of different things. But to answer the question, it's systemic, and different parts of the system are at play here with a cleansing and a gentrification of the industry is all that's going on. Which again, I think creates great opportunities. Not everybody's going to win.
Yeah.
And as you said before, only the winners will adapt. And they'll adapt and adjust and make it through this, no problem.
I would argue that there hasn't been big losers yet. So
not yet. No, not yet. No. There's a lot more coming.
That's the big question, because if the Fed bails out every bank, like they can't let any bank fail, but if all these banking failures are only headlines, because First Republic was bought by or absorbed by JP Morgan
and PNC,
and their creditors, their depositors, everybody is just going to see a name change in their documents. Like, is the risk still, like, you know what I mean? It's still.
So I don't know that it was that clean. Typically how this goes, I actually was going to do a presentation on this because I went through this through the Great Recession. I learned this. When they go through the FDIC, the FDIC is a backstop for liability. So I think JP and PNC went through the FDIC to pick up First Republic. Is that right? I think they did. Or it could have been the other one with Signature Bank went through the FDIC. One of them, I'm getting all the transactions confused, but one of them went through. I think it was FRC that went through the FDIC. And what happens there is the FDIC then creates an agreement with these banks saying that you guys can have all of the assets. We'll keep all the liabilities. And they have loss share agreements so that the losses will be socialized amongst all of the member banks of the FDIC, which means that all of the other member banks of the FDIC will have to pay more into the FDIC. And where are they getting that money from? From the depositors. So that trickle-down effect means that the losses, again, get socialized amongst the people. And so they will scrape away all the liability, socialize the losses, and then PNC and JP Morgan get clean assets, clear of liability. And anybody who wants to sue for the transaction will try to sue the FDIC because that's where the liability rests, and you're not allowed to sue the government. And that's where it all dies. At the FDIC, funded by the citizens. So you'll see a lot more of that happening, where you'll have the eye of the needle, but only the good assets get through the eye of the needle. All the liability stays with the FDIC, and no one can do anything about it. The losses are the losses, and good luck, people. You're done. And they will decide which banks will be able to go through the FDIC to have good assets go through that eye of the needle, and which banks will be there left to flounder, go bankrupt, because there is no real worth underlying and on their balance sheet. So you'll see a number of different things happening. So when you ask the question, what happened to these banks? The banks are only taking the good assets. So when the banks like JP and PNC get on the back end of that deal, they picked up gems. All the other garbage is left behind. That's all they're doing.
The real loser is in the grand scheme, it's society.
Yes, the shareholders.
In the short term, it's only the shareholders of that bank.
That's right.
It's not a big problem. It's not like before where there was trillions and trillions under stake. But I still feel that not yet. Exactly. That's where I was going. Where do you think? When is yet? When is this forever storm coming? When do you think is like? Because
what's the trigger event? I don't know what the trigger event is.
Already happened, but when do you think is the next domino falling?
It could be a number of things. Again, going political, war could escalate. I mean, you see what China is doing now, creating all these relationships around the world, taking trade in their currency and dropping the U.S. dollar. At what point does that trigger something else to happen? Is it rates continuing to go up through the central banks? Is it the issuance of the CBDC? There are so many things that could trigger and create a domino effect. I think they're all interrelated. Which one falls first? I don't know. I think they're all there, ready to fall. You know what it looks like? Remember you used to go to the carnival and you had that game with the quarters would hang off the edge? And you put your quarter in and you try and just knock it off and you're trying to get in there. They're all like hanging on the edge. Which one's going to drop first? I don't know. But once one goes, I think a lot of it's going to go. I don't know. I couldn't tell you. I just see a lot of that there. I stay aware of it, right? I'm not the student of all of that, but I stay aware of it because I see where certain opportunities are in my lane, how to capitalize on those in my lane. You know, we go and we buy these mortgages from the banks as well, and so for us, it's a good thing because there's going to be. We're all anticipating an influx of new assets coming onto the marketplace for us to pick up and turn through as well. So, but what triggers it? We're starting to see more assets coming through the pipeline. Just today too. I don't want to name the banks on the recording, but you got some West Coast banks even today looking for suitors to pick them up, and shares have dropped. 2 more California banks. It's just the beginning, I think.
Yeah.
It's just the beginning. I mean, last time it was a subprime crisis. I said this is just an extension of that, and all of the free credit that was extended in the last number of years, whether it be to consumers due to the pandemic, whether it be to corporations due to the pandemic. I think there's a ton of corporate debt that's overinflated balance sheets as well. So I think that's part of what you're seeing, and it's all part of the debt cycle and deleveraging, in my opinion.
But don't you think that, or at least that's been my feeling, that there is no peacetime in the markets? Never. Like if we have this conversation 10 years down the line, it'll be those corridors are still hanging, and there's still things that might happen,
Some have
and
dropped. There's more quarters behind them. Yes.
yeah,
Some
and
quarters have
everything
dropped, but there's still more.
exactly. So I also think that in a certain point, it pays. Like sometimes ignorance is bliss, because sometimes not knowing might make you even more proficient at what you're doing, and focus on your lane and being like, look, my lane, at least in the multifamily space, you see people going from complete optimist to complete pessimist. You see people saying, I feel developers are going to be crushed in the short term because they were not financed properly. And then you see the other guy that says, wait, but supply and demand can still show that there's 6 million units deficit, and we're only building 400,000 units a year. So to get to that 6 million mark, we need 20 years still, because every time that keeps expanding, and just to come to an equilibrium on supply and demand. So I also think that it's great to look at these, like I feel like when you're driving a car, you see that oil temperature, tire pressure, and certain things might be a little bit off or a lot off, and it depends on the driver to say, can I continue going? Should I park? Should I fix this? Or should I change cars? Like all this stuff is a way of saying the investor should not be paralyzed. That's my biggest point of the past weeks has been paralysis analysis. No one is going to understand. If something is systemically wrong, you are not the one to solve it. Like we are just mere mortals. Like we're just one guy talking or two guys talking on a podcast. We won't get anywhere but to solve this, or anywhere near to solve this. But we, at the end of our life, or in 30 years, the only things that will matter is what you did. So, and then the analysis paralysis shouldn't be there. It should be more like, okay, I see this tidal wave coming towards me. Where do you adapt? Not the strongest, not the smartest, but where do you adapt? So maybe the smartest is trying to make okay, I'm trying to understand this when you don't even know where to begin. And then the strongest might say, I'm going to hold money on the sidelines because I can. That one is not going to survive either, because I also think that they are being too cautious. If the subprime time was a bad lender crisis, or a bad borrower crisis, now we're having a liquidity crisis, and the person who has liquidity is the one that's going to win. So JP, as you mentioned, JP was able to absorb because they have liquidity. They've never had so much liquidity. Everybody ran and pulled their money from other regional banks and said, I'm going to put it with the strongest guy. So what did they say? Okay, great. I'm going to just take the jewels and let the society pay for the everything that's bad. But as an individual investor, you have to think the same. I think now there's jewels to be taken, and the worst thing that you can do now is do nothing.
Exactly right. Well, you're exactly right. Have you ever seen the movie Patch Adams? Robin Williams?
Yes.
So do you remember the beginning of that movie? The whole premise was he put himself inside of a mental institution because he thought he wanted to. He had depression, wanted to kill himself, and he met that one guy, Albert, who everybody thought was crazy because he'd walk around saying, how many fingers am I holding up? How many fingers am I holding up? And everybody would say 4, and Albert would say, no, you're another idiot. You don't know what you're talking about. And one night, Patch goes into his room and asks him the same question, starts to get to know him, and says, Albert, I want to know, what's going on here? What's the answer? He goes, oh, you're another genius. You think you know everything. No, I just want to know the answer. And he puts up the 4 fingers again. And he goes, how many fingers do I have up? He says, it's 4 fingers. He goes, no, you're looking at the fingers. Look past the fingers. He puts it in front of his face. He goes, look past the fingers and look in my eyes. Look past the fingers and look in my eyes. And when he does that, the fingers blur. And he goes, oh, I see 8. He goes, yes, don't choose to see the problem. Choose to look past the problems. And in looking past the problems, it's there that you will find the solutions. Most people choose to look at the problems, and therefore they're blinded to not see the solutions. And it's that type of mentality that, yes, you got to know what's going on in the world, but no, that's the problem. And don't get stuck analyzing the problem. Look past the problem, adapt, and find the solutions. But most people are stuck on looking at the problem and can't look past the four fingers. And that's part of where Albert's frustration was and why he might have thought he was nuts. How many fingers? Everybody said four. Just looking at the problem, right? And sometimes that's how we feel, right? That we could see through the problems, and everybody we're talking to just keeps seeing the four fingers. And sometimes it feels like we're nuts because we're living in a world where everybody just looks at problems, looks at the problem, looks at the problem. It's all doom and gloom. And then they act based on fear, as you were saying. Some developers are going to be like, oh, I can't get the right finance. I can't do the right thing. And, that's going to be a problem. Whereas you're looking at it like, no, the problem is there's 6 million units still need to be done. And we've got a lot of work to do. Looking forward, we got the next 20 years of business we need to do, as opposed to being stuck in, okay, so we're at a moment today where there's a lack of liquidity. Then just change how you're doing your business today. Become creative, and there's a way to work through what we're going through today. It's been done before. It'll be done again. And if you don't know what the answer is, you got to get with the people that know the answers because they're there.
Yeah.
And you got to start with, let's look past the problem to go find the answer. And it's not until you're on that journey to go look for the answer are you going to be able to find it. So it starts with the mindset, I think.
Exactly. And I would couple that with discipline, because the discipline to act is more important than the discipline to think. Sometimes our brain, like you said, sees four fingers, but when you're forced to act, you see past it.
Yes, you have to.
Because you have that discipline. And I believe that dollar cost averaging is the most successful form of investment periodization that exists, because no one can time the market. No one. And young investors, novice investors, and people who have never invested before think that the first question that comes to mind is this a good time to invest? And you think, how the hell am I supposed to know? There's no one can time it. Not even if you think about the investing industry and the finance industry, you're talking about the highest paying jobs, the smartest people, the most amount of AI, the most amount of computing power, if you win this game, you're the richest person in the world. So you're going to put the biggest resources there are to this, and they can't get it. Yeah. Why do you think you could get it? So the minute you lose that fallacy that you can't time the market, you act, okay, do we know that this is a bad time? Maybe we don't. Maybe we can say, okay, with 95% confidence, it's a bad time, but it could get a lot worse. Mm-hmm. Or it cannot. Maybe we're wrong. Maybe that storm that we're dreaming about doesn't come. And we were wrong. So what is the right way is to participate. Always participate. Exactly. Because the people that were bought on the highs should also buy in the lows. But everybody is waiting for an up market to buy, which to me is crazy. To me is like, why can't you have the discipline of saying, and this is how we think, one of the mandates that we put in our family office, we said, how do we put out money every month because we want to realize money every month or every quarter? We started with every semester, then we said, okay, how do we get to every quarter? And now we're getting to every month, and hopefully we'll get to every week. Because when you build that bridge, who cares about an up market, down market? Because you've priced in some of them home runs, and some of them you're doing averages, and some of them you're doing, but your average is always going to be positive, because the downturn has always been, if you look at the models 100 years ago, every time there's a recovery, it's higher than the highest point before.
That's right. And so there's tons and tons and tons of opportunity. And like I said, it's a mindset. And it's I forget who it was that said it, but maybe it was Charlie Munger who put it out there and said, one of the greatest skills he has is controlling my fear. Controlling my fear. What am I afraid of? What am I not afraid of? And how to control it and channel it. And if you look at, again, what we're talking about, people that are just fearful, they just have no control of their fear, and they let their fears envelop them and control them, and they don't know how to get through it. But look, some of the greatest fortunes have been made in downturns, economic downturns.
I would argue that the biggest.
Yeah, I agree.
I would argue that the biggest.
I think you're going to see, in my opinion, one of the biggest downturns that we've ever seen. This is going to be massive, in my opinion. When does it happen? Some saying this year, some saying the beginning of next year. I don't doubt that since we're going to be next year in a presidential year, I don't doubt that we're going to see chaos in the next 12 to 18 months in this country as well, politically, for a 2024 election. Where are we by that point? Is that maybe part of a trigger? I don't know. Doesn't matter. You got to be prepared for it, and you got to know how to capitalize on it. And that's where your values come into play as well. If you have your values and you're set, what's the difference? Which way the wind blows?
I met someone recently that he's a very big investor who told me that he always gives money politically, or he backs people politically. And I asked him, who did you back? And he said, the winner. I always back the winner. And then his answer was obvious. He backs all of them. He doesn't care which one is in power. He wants to be in the good graces. It's the hand you shake in both sides, because it doesn't matter who's in power to the one that has power, because he says, I need to not protect, but I need to play the game. And
no doubt. And it is a form of protection. That's right. It's influence, right? It's having, that's what go with it before too. It's fear and influence, and who has influence over who. And that's exactly right. You have to stay in the right wind of influence, and that wind could be blowing east or west. One day or the other, the winds will change, and you have to stay in the right breeze of influence.
Exactly. But then that also shows you that the uninitiated feel or fear all the time, because, if next election is going to be the same or the different or the crazy or the less crazy, or who cares who it is, you still have to do. So I would say that the investor mind, the investor mindset, I always talk about this. I always say that the investor mindset is not the pontificator. It's not the guy who predicts something. That's not the right mindset. It's not the one that argues. Arguing or being a contrarian does not get you anywhere. Contrarian people are very seductive, very attractive people, but that's not the right way to invest either. And they're not the ones that have like or I don't like the third type is the people which I call the dry leaves, the ones that wherever the wind blows, they also go. So last year was crypto, this year it's AI, and then they're like blown all over the place. And you see them influencing last year on crypto and this year influencing in AI, and you're like, either this is the smartest person in the world or doesn't understand anything, because you cannot be crypto and AI like that, or at least be a subject expert on both. So the real one, the true one, is the one that is looking to find the truth. And once they find the truth, find the ways that the truth does not apply. That's the scientist mode. The scientist mode is being, what do I think would happen? And if it's let's say, if there's more rates, how do I win? And if there's less rates, how do I win? And now have the courage to say, let's try something. And this is another point that I want to emphasize, that trying doesn't mean ride or die, all eggs in one basket, all in. I believe that it's so democratized now that you can participate in venture, you can participate in real estate, you can participate in private equity, you can participate in non-performing loans, you can, anything at your budget. There's opportunity. So if someone says, I only have $5,000 to do this, go out and do it. Because then use the other 5,000 to be in the stock market, use other 5,000 to be somewhere else, and then you can build a quite robust portfolio. And obviously it feels a little bit intimidating when you're a $5,000 check, but it's better to do it than not to do it. So I want to stress that people, the paralysis analysis, and they should try to put that hat on, not the hat of pontificator or dry leaf or argumentative contrarian. Use that, I have some excess money, even if it's $20,000, put it to work in different things, and okay, this doesn't work, this did work, so okay, I balance out to zero or to positive, and then adapt and change, and that will make you a better investor over the long term.
No doubt. It's I was going to say something to that point. We brought up so many good points that my thoughts went all over the place with that. You bring up very, very good points. It's a matter of just starting and getting. Oh, that's what I say. And honestly, I believe that a lot of that again goes back to fear. What if I get it wrong? I don't know enough. I don't have enough money. I don't have enough knowledge. I don't have enough skill. What if I lose it? And I don't have the time to do it. See, and that's where I get, part of what bugs me sometimes are these financial advisors that are out there that only want to put people into traditional markets, the cookie cutter portfolios, and don't expose their clients to alternative assets or how to hedge or how to do asset management or how to do cash management or treasury and all that other stuff. That it all surrounds creation and preservation of wealth. They just want to say, no, we'll just get, we'll put you into these particular products. And the reason why they steer them that way is because they're making nice commissions. And they don't necessarily have an alignment of interests with their clientele. Put them into the retail market, create a cookie cutter portfolio, and once things go bad, stay in. No, dollar average down, but they don't tell them how to prepare in other ways and diversify, especially into alternatives. And so you get a lot of this. Fear is, I believe, sourced because of the lack of knowledge, and then they want to abdicate control to somebody else who theoretically has knowledge because they have some sort of certificate that says they went to a class and somehow they're an expert all of a sudden.
And this is you talking about systemic problems. We should write a disclaimer in every episode. This is our opinion. We cannot tell anybody how to invest, but I could start a podcast and tell you, you should eat this, you should eat that, and I can give you all the health tips I want, but I can't give money tips, because
Right.
without these huge disclaimers, I believe that the system is rigged towards financial managers, and then using lingo that nobody understands to then be able to justify higher fees. So the reason that I also encourage people the people who are listening to this, or hopefully somebody's listening to this, is that they come out with tools to understand that money is not that complicated. Money is something that we invented as humans. It's not trying to understand how biology works. That's super advanced. Whereas and has rules, whereas money has man-made rules. So these man-made rules can be learned, can be changed, can be interpreted in different ways, and then you have to make your decision and go. And I think that systemically, as a population, we need to be better educated about money, about taxes,
Yes.
about how to grow our wealth. I think that the 9 to 5 is beautiful. It's for some people, it's the greatest glory. It's the best. It's the most addictive thing to have a paycheck at the end of the month, and that could be great.
Security.
But that
It's
is not
security.
enough.
Yeah.
But that is not enough anymore.
Right.
Everyone in the world, I believe, should be investing. If you look at their curve, the curve of salary it's like a staircase. You can work 5 years, then you get a promotion, and work 2 years and get a promotion, but your expenses and your needs and your requirements are exponential.
Right.
Your family grows from 1 kid to 2. Your expenses are not a staircase. They become exponential. They become really massive. And then you think, I cannot outwork my salary. So what do I need to do? Invest. So everybody should be, if you're employed, self-employed, small business owner, everybody should have investments. And that gray area of investments should be, everybody should have at least basics, and then take matters into their own hands. Take matters into their own hands to at least talk to professionals, not the typical like I think banking or mutual fund is the most common. But go
Those are
out
salespeople. They're selling their own.
Sales.
They're salespeople. That's all they are. They're not investment professionals. They're salespeople.
And I would always say that paper and Excel are the biggest liars and the biggest revealers. You can put anything into a paper, and then they could say, "Oh, we could not predict the war." Of course you can. No one can.
So I'll close our discussion with 2 thoughts on that as well. As we said before, I think a lot of the fear is because people don't know, don't understand, don't have the resources, and their fear is that they don't want to lose, or they want to get it right. But what most people, I think, don't understand is there is no right and wrong in investing. It's a judgment call. No one is that I've ever met clairvoyant and can tell what's going to happen in the future. It's a judgment call. And you seek out this information from professionals in different places to try to be as best educated as you can. And no matter what level of education, it's still a judgment call. And that's why it's called investing, because you're taking some risk. There is no right or wrong. So as you say, the paralysis of analysis is the worst thing you can do, because you're going to miss out on opportunities. So it's important, as you say, for everybody to get involved, no matter what level, and don't overthink this. It's really not that difficult to get involved, and then on any level they should, and start. When's the right time to get started? Now.
Yeah. So I always say, let's end this one with a quote. When was the best time to plant a tree? It's 20 years ago. The second best time to plant a tree is today.